Welcome to Wise Man's Dollar, a podcast for everyday working people who want to eliminate financial stress, make wiser decisions with their money, and build a legacy for future generations. I'm Sunjata, and I'm so grateful that you're here with me once again to check out another episode. So, in episode 7, I shared why I decided to become my own banker. In this episode, I'm going to share the process that I went through to start my first properly structured dividend paying whole life insurance policy, including how I structured my money and premium payments. And I'm even going to share how much I started my policy with because I want to be really transparent because I really want everyone to learn about how I'm thinking about it and how I'm going about it. And, hopefully that will inform how you may move forward if you decided this is the right strategy for you. So let's jump into story time. I'm going to take you on my journey that I went through and how all this kind of works, how all of this kind of works behind the scenes. So, after my initial deep dive of reading articles for and against IBC, which is the infinite banking concept, and watching a few YouTube videos, um, and ultimately deciding that I wanted to start a family banking system, I eventually realized that I need to do this personally, that there was a lot of value in what this could do for me. So, I actually stumbled on this one podcast that had the founder of Ascendant Financial. His name is Jason Lowe. He was on the Better Wealth podcast, and I've learned a lot from the Better Wealth podcast. And Caleb, who's the host of that podcast, about this whole infinite banking world and whole life insurance world. That's one of the places where, I've just learned a lot. And I saw Jason Lowe, the founder of Ascendant out of Canada, being interviewed by Caleb on the Better Wealth podcast. And that caused me to visit Ascendant Financial's website. And I read through their website. And, Jason Lowe really emphasized the importance of reading Becoming Your Own Banker by R. Nelson Nash. So I got that book. And on the website, it mentioned that they want people to read that book before they'll even move forward to work with them because they really felt that it was important. That folks were educated on what they were, asking about and looking to get involved in. So I made sure I did that. And eventually I filled out a form on their website to meet with someone. And eventually, a gentleman named Josh Fury from the Ascendant Financials US team reached out to me. So, as a sidebar, several months later, I've now become a wealth strategist, or as I call myself, an intentional wealth strategist with Factum Financial, which is here in the US. Even though I got my policy and started my own personal bank with Ascendant Financial. And the cool thing is, both founders and most of the agents and advisors at both companies know each other and support each other. And, it's a small community of folks who have become licensed infinite banking practitioners through the Nelson Nash Institute. And, they get together annually at at the various conventions, et cetera. And I'm just getting started in the space, and I look forward to attending and meeting all those folks there as well. But with that said, Factum was the better fit. So that's why I became a advisor and strategist with them. But going back to my experience with Josh Fury at Ascendant, it was a really good experience. And the cool thing is when Josh initially reached out to me after I completed that form on their website, he had taken some time to get to know who I was because I had a link to another business website and personal website of mine where I write articles and things. And he had read one of my articles, and that really, that meant a lot, and that he would take the time to do that and kind of get to know me a little bit before, we actually met. And so that stuck out to me right away. And then, of course, he wanted to understand what I knew and how much information I was coming to the conversation with, and how much, how educated I was on IBC. And I explained to him that I had read, Becoming Your Own Banker, and he explained to me that that's not the norm. Most of the time, people will set up a meeting with them, and then after that, they'll tell them, go read the book, and then have to wait a week or two, for folks to finish reading that book. But he knew that I must have been really serious because I had already done that. So from there, after that first initial meeting of kind of getting to know each other and understanding my needs, he sent me a financial fact finder. And in the financial fact finder, basically, it's just getting an understanding of my financial picture. And, from there, he would be able to make recommendations on how I should have my policy structured. So I went through the fact finder before the second meeting, and the next time that we met, it was a longer meeting. And during that meeting was used to complete the application for my policy. And he came to that meeting again with recommendations based on my situation, my assets, my liabilities, my debts. How much cash I had on hand, my monthly expenses and things like that. He wanted to understand that full picture because it's important, that I was in a situation um, that was sustainable in terms of monthly policy payments, et cetera. And also my goals were important. So for him to understand that I wanted to start a family banking system in addition to a personal system, and understanding the impact of that on my resources was important to understand as well. So after the second meeting, Josh said, okay, I'm going to get back to you. And a few days later, we scheduled another meeting, and maybe by that next week we met again. And during that meeting, he shared the initial illustration of projected numbers based on my monthly premium and the initial capital that I used to fund my policy. And again, there's lots of different ways these things can be structured. Um, you know, but the important thing for your bank is the capitalization phase. And capitalization phase is basically where you're building up your bank with enough capital so that you can then use it to give yourself loans to do all the various things that we talk about with the infinite banking strategy. So, some people just fund it with their policy payments, whether you pay them monthly, quarterly, or annually. And some people also add an initial lump sum of money to get started. And that's something that I chose to do. So let's see, I had a bunch of questions. And, throughout the whole process, Josh was very patient. He answered all of my questions during the call. And then we would hop on, and then I would also email him questions. And, he answered those questions, graciously and patiently as well. And after that conversation, he let me know that the next step in the process is submitting my application. And once he submitted my application, it had to go into underwriting and through the whole underwriting process. And a key part of that was, getting my health exam, having someone come out, and they actually came into my home. I had the option to go to a clinic or a lab to have my blood drawn, have my weight, and answer some health questions and health history questions. I could have gone into a lab to do that, but I chose to have someone come into my home. So I scheduled that. And that took a couple of weeks. It was around the Christmas holiday, 2025, that I was going through this process. So, of course, there was some gaps because of that. But eventually, I had my health exam in home, and about a month later, after going through all that process, waiting for the whole holiday breaks and everything for Christmas and New Year's, at the beginning of January, my policy was active. Okay. So, in effect, I was my own banker, and I was really excited about that. So, the next thing I want to share with you all is how I structured my initial policy and, what I chose to pay into that initial policy. So I started my first policy with paying $250 a month in premium. And I chose monthly just because I like budgeting things month to month. And So I chose monthly in that regard. And another thing that I did was I chose to put $4,000 into my policy as a lump sum up front. Now, this is the first policy. That's why you keep hearing me say my first policy, because I intend to purchase additional policies. In addition to, I also contribute to my family banking system with my siblings and cousins. And that's going to be a whole different set of episodes when I talk about the family banking system that we've started. And so with that, I have money going to that, and I have money for my own policy, but I'm also going to have a system of policies personally. I intend to take out policies on my children and my parents as well, just to diversify and have a system of personal policies going as well. So for the initial policy, I took it out on myself. Okay. And moving forward after year one, because I put the initial lump sum, I have flexibility in my payments. So this is one of the things that when we talk about properly structured, when you structure a whole life policy for infinite banking, there's flexibility in payments built in. So I have a base premium that is my base whole life, okay? And that's where I can pay 115 a month. That is the base premium that gets me X amount of death benefit. But then there's different riders called paid up additions that are added to the policy to give it the banking function. And the difference in that is I can pay up to $700 a month starting in year two into my policy to grow it faster. And but some months as I want to, if I want to pay as low as 115, I can. Other months as I want, if I want to pay up to that 700 ceiling, I can. So that gives me a level of flexibility. Um, Let's see. So again, that's the structure in terms of the amount of premium, monthly premium. I started with that lump sum, and I have some flexibility between my base policy and what's called paid up additions that I can, pay into my policy every month, ultimately annually. And of course, what's the benefit of paying for more paid up additions is that that's a higher amount of interest and dividends, contractual growth and dividends that I will get, the more that I contribute to that policy. So for me, I'm going to be looking to max that out month in and month out. I can't tell you all like how excited I was once I finally got started because, once I learned about this, I was just like, man, I wish I heard about this 20 years earlier. And, it's one of those things that is literally never too late. There's people who are in their 70s, getting started with this for the first time. However, with anything, when you talk about compounding interest and compounding dividends, the more time that it has to compound, the more interesting and exciting things can get, so man, I was just like, super excited that I got started, super excited that I made this decision for my future self. Because one of the things that's really cool is that looking at my policy, because it's contractual, there's the guaranteed portion and then there's a non-guaranteed portion. The guaranteed portion is something called the internal rate of growth that is built into your contract that you can see on your policy illustration. So you can see exactly what your numbers are going to be year over year just by paying the minimum standard policy premium year in and year out. Then there's the non-guaranteed portion. The non-guaranteed portion is the based on how much, you know, paid up additions you put into your policy month in and month out. So it's based on your performance and your behavior. If you take out loans and you pay your loans back and you pay a little extra interest that goes into your paid up additions, then your policy is going to perform, better in terms of earnings and dividends, and also dividends. The dividends are non-guaranteed. And the reason why the insurance company can't show you guaranteed dividends is because it's based on their profits, year in and year out. They do show you non-guaranteed dividends, which is just an example of what the dividends could be based on conservative projections. But the reality is You know, one, again, it depends on how much you're putting into your policy month in and month out, which determines the rate of growth of your dividends, because the more you're putting in, then a higher dividend you're going to get. But also, their dividends are based on profit, which they won't know until the end of each year. The projections they give are conservative, and usually they outperform those projections. And also, I love knowing that for the last 150 years, the company that my policy is with, called One America, they have always made a profit, and they've always paid out dividends through every recession, through every stock market crash. They've always paid out dividends, and they've always made a profit. So I love knowing that my money is somewhere that is stable and safe and still working for me. Another cool thing is, in year 20 of my policy, um, it shows that there's a 50% growth, guaranteed growth rate. And that doesn't include the dividends. And that doesn't include me paying more than the base policy requires. So I'm really excited about how this policy is designed and how it's going to perform for me long term. So, you know, I don't know about you, but I don't know about any other financial asset or investment that can guarantee that type of return without risk. So, man, I hope that me sharing what I've shared about my policy and how it's structured and the amounts that I've gotten started with will just give you some more clarity and some more insight into how all this works. I hope that me sharing about, the process of starting the application and working with the agent and all those different things, again, will just inform you. And in later episodes, I'm going to share how I went from starting these policies and starting my family system for my own personal benefit, and my family's benefit, to how I eventually made the decision that, what, as an entrepreneur, a serial entrepreneur, and especially as an entrepreneur who has created businesses and services based on education and educating others, why this made sense for me to pursue as a business, and why I am an intentional wealth strategist who's partnered with Factum Financial. So I'll share more about that in later episodes. However, if you have any questions for me about any of this, I'm going to drop the email shortly. If you want to learn more, I'd be happy to work with you and provide you with the education. And one of the things I love about Factum is that it's education, education, education. It's not about selling anyone anything. It's about providing education and helping people with their needs and going from there. So, thanks for tuning in to another episode of Wise Man's Dollar. This show is designed to spark curiosity about how people become their own bankers using properly structured, dividend paying whole life insurance and the infinite banking concept. If you would like to go deeper, I have a library of educational videos and resources that break this down into detail, including things most people never get taught about how this works. Just email me at wisemansdollar@gmail.com and I'll send you access for free. If you enjoyed this episode, please hit the like button and subscribe, and drop a comment about what resonated with you. And share this with someone you know, because wisdom grows when we pass it down. And remember, like my granddaddy always said, any man can make a dollar, but it takes a wise man to spend it. I'll see you in the next episode. Peace.